Welcome to Startup Spokane, where hosts Steve Traben and Megan Halsey explore the excitement and momentum growing throughout Spokane's expanding startup community. Startup Spokane is a joint effort between Greater Spokane Incorporated's Startup Spokane, our friends at Well Dressed Walrus, and Spokane Talks Online. Now, here are your hosts, Steve and Megan.
Welcome to Startup Spokane on Spokane Talks Media, your podcast home for everything entrepreneurship related in the Spokane region. As you know, Startup Spokane is a program of Greater Spokane Incorporated, and we're here to provide information about entrepreneurship and provide you, whether you're launching or growing your business, the information you need so that you can be successful. Wildly successful is what we're hoping for every day. So Megan, let's get this great conversation started with our guest. How about introducing Rick?
We're excited to have Rick Repp. Rick Repp is a principal at Witherspoon Kelly and has been working in the startup ecosystem for a number of years now. You want to tell us a little bit about yourself and your experience?
Sure. I'm primarily a business lawyer, but my focus over the past 17 years has really been on securities offerings as well as a number of M&A transactions. And it all got started because when I applied for my very first summer job with Witherspoon Kelly, I showed up with a prospectus that I had used to help an Idaho company successfully raise $500,000 so that they could be the private label manufacturer for REI's organic backpacking food line. And I got that's really sort of changed the direction of my career, and I was trained within Witherspoon Kelly to help a number of clients raise money from investors. And in the past 17 years, I've done over about 70 private placements to the tune of over $850 million, as well as a number of registered offerings with the SEC as well.
So it makes Rick the perfect guest for us today because we're here to talk about equity financing for entrepreneurs because there's a lot to it. There's a lot of allure. People are enticed by the idea of equity financing, but many people don't know any of the basics along with that. And Rick, you're not a stranger to our ecosystem. You've been part of building the entrepreneurial ecosystem in our region from the get-go. So I'm thrilled to have you as our guest today and for you to bring your knowledge with you. So let's dive right in and talk about what equity financing means. Just kind of, we'll keep it at the most basic level. So you want to just start with what is equity financing and maybe what other options exist for raising money?
Yeah, when a company's raising money, there's really two basic options. They're either going out and they're obtaining debt in the form of a loan, and sometimes they can successfully get a loan from a bank or from some type of small business financing institution, or else sometimes they're getting a loan from friends and family. But a loan has to be paid back, and typically with interest, and typically within a certain time frame. The alternative to going out and raising debt financing is to issue equity in your company, and that just means to sell a share of your company. Part of your company gets sold to outside investors. And that's what equity financing is. It's selling part of your company.
Yep, that's great. I love how you kept it at the lowest level, for sure.
So how do you divide up your company? Yeah. What's the structure that you use to parse it out so that if you say, okay, Grandma gave me $100,000 and she gets 10%, what does that look like? How do you do that?
Well, so a company needs to keep what's called a stock ledger, or sometimes is referred to as a capitalization table, that keeps track of what investors have put in how much money, and then what the investors receive in return depends on the structure of your company. So if you're like a C Corp or an S Corp, which are specific types of corporate entities, then you are typically issuing either common stock or preferred stock, and that stock refers to shares of the company. Now, you might be an LLC. There's a lot of companies that form as limited liability companies today, and then the company will be issuing membership units or just membership interest. And again, that refers to the percentage of the company that you own. So in just really basic math, if you have 100 shares available, that represents 100% of your company, and then you decide that you're going to sell 10% of the company in exchange for $10,000, then that investor now owns 10 of the 100 shares. And so 10 divided by 100 equals 10%. They own 10 shares in your company.
Okay. And so you talked a little bit about the business formation and the structure. So are there some prerequisite things that an entrepreneur has to do with their company in order to be in a position to raise money in exchange for equity? So do they have to be, they either have to be a C Corp or an S Corp or an LLC to do that, Rick? And
yeah, I mean, if you want to be recognized by the state that you're incorporated in, so let's presume that I'm licensed both in Washington and Idaho, so I've worked with companies in both states. But let's just presume for the moment that we're talking about Washington Company.
Yep.
So Washington Company, the very first thing it needs to do is file articles of incorporation with the Secretary of State of Washington, and that's what forms the company. And if you haven't formed a company, then you don't really have shares of a company to sell to investors.
Right.
There are people out there that are called sole proprietorships, or they're doing business as, and so they might be using a business name, but if they haven't formed an entity, it's really just them as an individual.
Right.
They have no shares to sell.
Okay, so point well taken. You want to form your entity, then you decide you want to give up a share of your company for some amount of money. Gosh, I mean, how does an entrepreneur go through the process of determining how much of my company or their company they're willing to give up in exchange for what amount of money? This whole thing called valuation, right? So let's spend a few minutes talking about that, because that is a complicated. I think it's complicated because it's really a negotiation, right?
Okay.
Well, sure, and valuation of a company it's kind of a specialty in and of itself. There are individuals in this community, many of them work for some of the accounting firms in town, that specialize just in valuing companies, and that requires some definitive analysis that's often based on what are the other companies of a similar size and revenue valued at, what are the assets of the company worth, and what is your income. But all of those mechanisms used to value a company are not really available to a brand new startup.
Right.
So the brand new startup has to really convince its investors what the idea that it has in mind is worth. And it does that by the entrepreneur needs to sit down and do some pro forma financials that identify what is our potential revenue based upon the potential size of our market, what are our potential expenses, how much is it going to cost for us to generate that revenue, and they're going to have to lay that out in some spreadsheets that then the investor can look at and say, is this reasonable or is it not?
Right.
And based upon whether or not you have a reasonable expectation of what your revenues are, then we can sort of get an idea of, well, what's this company going to be worth 5 years from now, 10 years from now, what's it worth today? And so there is no definitive answer on what any individual company is worth. It really comes down to how much money is that company going to generate?
Yeah.
And no one knows for sure. So a lot of it's conjecture.
But the other part of this is how much money do they need to raise, right? I mean, so that I think goes hand in hand with the pro forma that you just described. So as an entrepreneur is projecting revenues and expenses, and oftentimes there are a lot of startup costs associated with getting to the point where you can generate revenue. That's usually where you can kind of back into the number of here's how much I need to raise in equity, right?
A lot of times, a lot of startups I've seen, within this community, a lot of times if your idea actually has legs, like the investors believe in your product, the service that you're offering, the management team, and they believe that you will be able to obtain your goals. It's not unusual for a brand new company to be valued at about $1 million. And the investors will come in and say, we need about 20 or 30% of that in exchange for $200,000 to $300,000. And a lot of times I've seen a number of companies get started in this community with, $300,000, $500,000, $250,000 based upon the idea that at the beginning, when they don't even have any revenue at all, is probably $1 million idea.
Right.
And that's approximately how much money of the company they end up giving up in order to get the investors involved.
So
and then it's a question of what can you do with that money? What's the next milestone that you're going to achieve with that $250,000, $300,000, $500,000?
Right.
And a lot of it is determined on how long it's going to take them to start generating revenue to offset that $500,000 too, or whatever the investment initially was. That's one of the challenges we see with some of the companies we work with, where they're like medical technical type companies take a lot longer to generate revenue because they have so much legal and regulatory control. So that's kind of an interesting thing. That investment number can get higher and higher. So we see.
Quickly.
angel investors come in typically and may have $500,000 invested in a company or more before it actually starts generating revenue.
Sure. Well, yeah, no, in the medical field, the numbers quickly get higher because of all the testing that has to go through before it's approved to be used on patients.
Yeah.
So in the medical field, $2.5 million is maybe just barely
Chump
gets you
change.
get started.
Yeah, I mean that's one example. So I want to get back to just some of the things that you just kind of threw out. Oftentimes at the idea stage, when it's difficult to put a value, $1 million might be a number that an entrepreneur could be thinking about. And on the investor side, the investors are thinking they probably want 20 to 30% of the company for probably for what kind of investment? 200 to 300,000? Is that what you're thinking, or what kind of investment?
Well, that's something that I've seen. In this community, I have seen some angel investors willing to step up and put $300,000 to $500,000 into a relatively brand new company in exchange for 20 to 30% of the company.
But it is a negotiation. At the end of the day, the terms are those that get agreed upon between investor and entrepreneur. Right?
And it really comes down to the investors that do this sequentially. They do it more than once for more than one company. They've sort of developed their own parameters, and they have a pretty good idea once they look at the projections and the pro forma financials and the business plan, such that it is, even if it's just an investment deck. They look at what the entrepreneurs put together, and they can assess pretty quickly whether or not this is something that they're going to be able to hit their targets or they're not, and then they adjust the amount they invest accordingly.
Right. And so real quickly before we go to our break, Rick, is this also an opportune time for an entrepreneur to seek legal representation or counsel with someone like you so they get some guidance from someone on their side, not just from the investor side?
Definitely, yeah. One of the important things that a legal counsel will do for an entrepreneur is help them put together the term sheet.
Yep.
So the entrepreneur really needs to sit down and determine how much of the company they're willing to give up, how much money they need to raise, what rights and privileges the investors are going to receive in exchange for that money. That all gets drafted in the term sheet. That's step number one before you even go out and start shopping for money from investors.
Right.
You really need to have it put down in writing, and that's where legal counsel can help.
Good. So we don't want entrepreneurs that are listening or viewing our program to think they're on their own trying to navigate this. There's help from folks like Repp, and we're having a great conversation with Rick from Witherspoon Kelly about equity financing for entrepreneurs in our ecosystem. We'll be right back. Come back and join us on Startup Spokane on Spokane Talks Media.
Your home is unique, and you deserve an assessor that understands Spokane real estate home values. I'm Realtor Leonard Christian, and I'm running to be your next county assessor. I served our nation for over 20 years in the United States Air Force and as a Washington State representative. I have the education, skills, and experience needed to be your next county assessor, and I encourage you to find out more at leonardchristianforassessor.com. People matter, and you deserve a leader who listens. It's time to elect Leonard Christian for Spokane County Assessor, paid for by Leonard Christian for Assessor.
Hi everyone, I'm weather forecaster and assignment anchor at Spokane Talks Online, Colin Pittman, and I am honored to be the host of the new program, Spokane's Youth Spotlight, brought to you by Spokane Talks Online and the Spokesman Review, where we are interviewing and getting to know outstanding youth in our community each month. If you'd like to nominate someone in our community that you think should be recognized, that is doing something great here in the region or has an amazing story, visit SpokaneTalksOnline.com or Spokesman.com and look under Youth Spotlight to nominate. And be sure to tune in each month as we find the best in the Inland Northwest.
Hi, I'm Larry Myers, owner of River Ridge Hardware. Welcome to our garden center here on the corner of Garland and Driscoll. We have fresh plants that come in weekly from all of our local growers. We can make your garden look like our garden. Here at River Ridge, we've been here 30 years. We're your full-service neighborhood hardware store. This is our sprinkler aisle where my knowledgeable staff will help you put together your sprinkler system so it will make your yard lush green for the spring and summer. This is River Ridge Hardware's rental center, where we provide a multitude of equipment for rent for the do-it-yourselfer. Next time you're working on your home or yard this spring and summer, stop by, say hi, and we'll help you get the project done.
See you tomorrow night, and thanks again for taking care of the painting.
I got this.
Bye.
Weekends are made for painting. Let the experts at Rada Paint take care of you.
Hi. This looks amazing.
Rada Paint, over 80 years of quality, tradition, and trust. Find it in every can.
Welcome back to Startup Spokane on Spokane Talks Media, where we're talking to Rick Repp about equity financing. So one of the things that we had talked about on the break was, is equity investment appropriate for every company?
You know, that's a good question. I think it really depends on what plans for the company does the entrepreneur have? What do they foresee that company becoming? Because the key thing to remember with equity financing, when you're taking money from investors, those investors want their money back at some point.
And then some, right?
They're looking for a return on their
Right.
investment.
Right.
And a lot of times, and if they're professional investors, you know, some of the angel investors out there, some of the angel funds, institutional investors, you know, they will often invest in multiple companies. And they're always, but they will only invest in a company that they foresee returning a 10x return on their money.
Yeah.
Because they know they're likely to have only 1 out of 10 or 2 out of 10 of those companies actually succeed.
Yep.
And so they need to get a 10x return on at least one of their 10 investments to make it worth their trouble.
Right.
And so they will limit their investment options to all of their investment options are companies that they think can get 10x return on.
And I want to just be clear, 10x, so like a 10x return on a $10,000 investment, that's $100,000 that the investor's
Yeah.
hoping to get back. So that alone sort of narrows the field down to companies that are scalable, right?
Correct.
That have some
Yeah.
kind of growth trajectory from a revenue standpoint, likely not some of the lifestyle businesses. I guess we categorize businesses as lifestyle. If you know you're going to start a business to basically support yourself.
If you're trying to create your own job, then raising equity investment from outside investors is probably not the right path.
Right. Yeah. Okay. Good.
It's really the investors in this space are really looking at, a lot of times it's tech companies that have some real growth potential, that have the ability to generate, you know, potentially millions of dollars of revenue and hire, you know, many employees.
Yep.
That's the kind of growth opportunity they're looking for.
Okay. I think that defines
That
it well.
clarifies a lot. So let's say that you are the right kind of company, that you are a scalable company, and you are thinking that investment is the path for you. What are the phases you go through when you want to invest?
So the stages of investment?
The life cycle of the company, the stages of investment. What does that look like?
Sure. So a lot of times the entrepreneur is really expected to go through some pretty defined stages. And that first stage is, you know, they're going to be putting in their own sweat equity, and they're going to be putting in bootstrapping the company with their own funds as long as they possibly can to prove out, you know, to at least define the idea, the product, the proposal. And then they're also going to be expected to reach out to their own friends and family, because I mean, if you have to go to strangers before you can go to your own friends and family, then that might say something about the quality of your idea.
Right.
But after you've exhausted your friends and family, which quite frankly often happens quite quickly, but once you've exhausted your friends and family, and then you're going to need to start looking for some angel investors that are willing to invest at either the seed or even the pre-seed stage.
Right.
So one of the things that's kind of exciting about the Spokane community right now is the Startup Spokane has been behind the Mind to Market program that is offering pre-seed financing for qualified companies. And so that's fantastic, because now there's this opportunity to get, you know, ballpark $50,000 to really prove out your prototype and prove that you have an idea in the market. And then once you've sort of taken that money and proven that there is a market for your product, then you're ready to go and present to some more sophisticated angels or early stage VCs that are going to say, okay, this is a company that has legs that could really grow. Now we're ready to plug in $250,000 to $500,000, and let's see if we can grow it to the next stage.
Right.
And so the stages I would really summarize is, you know, the founder puts in their own money as much as they can, then they go to friends and family, then they go to seed and pre-seed, which are often angel investors. And then, by the time you're ready to accept and put to work $2 to $3 million, then you're probably going to be ready for an institutional, professional venture capital fund.
And
or private equity, or or an industry strategy investment from another company that's in your space. Yeah. But those are really kind of the lifespan stages you go through.
And I think because I want to provide some valuable information even for those companies that are more on the lifestyle side. So you started with your own money, bootstrapping, and friends and family money. Mm-hmm. I mean, that money, any business can go raise that. So it doesn't have to be scalable to go ask your mom and your dad and your uncle John and grandma for money for your business, right?
Sure.
It's really when you get to that pre-seed, angel, seed round, venture capital round that you really have to be a scalable company to pursue those kinds of dollars.
Definitely.
Right?
And as an entrepreneur, again, it goes back to this idea that the investors expect their money back. They expect a return on investment. So if the entrepreneur cannot put forth a reasonable plan for how they're going to grow the company and provide an exit for those investors, either through eventually going public, like Facebook did. They did an IPO, and that returned a lot of money to those early investors. Or they have identified some other players in the market that are in the same industry that would be willing to buy their company. That's the primary exit for startup companies today. Most startup tech companies get acquired by larger companies.
Right.
That is the primary exit.
Mm-hmm. Right.
And so you really have to be growing a company that offers something that someone else is going to want to acquire. And then the investors are going to be looking at the entrepreneur saying, is the entrepreneur going to be willing to grow the company as big as he can get it? And then is he going to be willing to step aside and bring in a professional manager at some point or sell the company? Or is he going to be just content to stay the CEO for as long as he possibly can and possibly not provide an exit to the investors? And that's part of the negotiation, that's part of the due diligence that occurs. But every now and then you'll see even tech companies that are scalable that will become zombie companies because the CEO decides he doesn't want to grow it anymore, but yet there's no opportunity for the investors to exit, and the investors get pretty frustrated at that point.
Right.
And so as an entrepreneur, you really need to think about, where am I taking this company?
Yeah.
And that's going to be part of the story you're telling to investors.
And that's another strategy as to whether or not investment is actually appropriate for a company, because if you want to love and keep this company in your family for the rest of your family's generational life, investment may not be the strategy, because you may not be able to make the exit or the return that your investors are looking for. And so, that's one of the things that when somebody comes in, if they tell me that they want to keep this company forever, we look at other alternatives to investment.
Yep.
Sure. So. Well, and I've actually represented public companies that have deregistered, delisted, and then cashed out their public shareholders because the family did want to take it private.
Yeah.
So sometimes there are certain businesses where the family wants to pass the company on generation to generation, and they don't want the outside investors involved. So you really need to have, an entrepreneur needs to have a clear idea of what kind of company they want to have down the road before they even take that first investment dollar.
And Rick, what's your sense of the funding landscape here in Spokane? Do you think there's money available for these entrepreneurs at all these different levels?
There is money available for the right company. I know that there are companies that get frustrated because they are not as successful at raising money as they would like, but I've seen some great examples.
Yeah.
I've seen some great examples. I'm closing a $2.5 million investment, Series A investment next week. Last month, one of my clients just raised $1 million in a convertible promissory note. I've seen, some of the companies that have publicly announced successful raises. Safeguard Equipment is some college students that came out with a business plan idea. They run some business competitions. They were successfully able to raise $300,000 from local angels. Gestalt Diagnostics was successfully able to raise $2.7 million from local investors.
So the money's
there for the right idea and the right business.
And
Not
right
every business, but there are investors looking for the right opportunities.
Yeah. And I want to put a plug in for the investment landscape in Spokane. We've got the Mind to Market Fund, which is a pre-seed fund of about $825,000. We have the Spokane Angel Alliance, which Rick, you and I are both serving on the board. They've had great outcomes in the last 5 to 7 years in terms of investments and whatnot. We have access to lots of venture capital, even though Spokane's a secondary market. Venture capital is accessible. They may not have brick and mortar locations here, but the people are here and accessible.
And people are excited. Those investors are looking for companies out of secondary markets because they can run more efficiently for a longer period of time on a smaller investment. And so we're seeing a lot of the folks we're working with find access to capital through alternatives as well.
So this has been just a great light touch on equity financing. Megan, I know you wanted to encourage people where they can get more info.
StartupSpokane.com. We have our own YouTube channel, and you can go to StartupSpokane.com. You can check out the blogs, the videos, the podcasts we have there. But we also have on our YouTube channel a series that Rick has done for us on venture capital investing that includes the basics. It also includes investment instruments, so understanding the term sheets and the different kind of products and terms that you might encounter if you're taking on investment. And then he's going to finish that up in the next couple of weeks with another one on what happens after you get investment. So please feel free to log on and check those out. They're a great resource. But it looks like we're out of time today. So I want to thank everyone for joining us at Startup Spokane on Spokane Talks Media, where we've had a great conversation about equity investing with Rick, and we look forward to having you join us for future podcasts and broadcasts. Thanks
Well, thank you for having me.
Yep.
Yeah.
Thank
pleasure.
you.
Startup Spokane is produced in Spokane, Washington by SpokaneTalksOnline.com, which is a joint effort between GSI's Startup Spokane, Well Dressed Walrus, and Spokane Talks Online. Ask a question, recommend a guest, and hear this program again online anytime at SpokaneTalksOnline.com. We wish you a great and profitable day.